Hello, I'm John McLaughlin. Welcome to another Crossfire gold trading strategy on the 5-minute time frame. It's Friday afternoon, so if you're looking for some excitement for a Friday afternoon before you go into the weekend, then today is Non-Farm Payroll. It's Friday afternoon, and it's also gold. So we're going to be in for quite an interesting session, I think, today. Once again, as always, so much thanks to all the subscribers, all the people that send messages, and all the people that really benefit from these videos. I get the feedback from you for what you want, and I deliver, the sort of things that you're looking for. So it keeps that constant learning going. So thank you for that. And if this is the first time you're visiting the channel, then please consider subscribing to the channel. It just lets me know that people are out there, that you want the information, and I can make appropriate trainings for you. And trading is this particular strategy with Crossfire is really simple, but I understand that trading to a beginner can seem quite intimidating and off-putting sometimes. So subscribe, and I really appreciate you for that. Okay, let's get into the session today. Let's go. Okay, welcome to another Crossfire gold trading strategy. It's Friday today, and Friday and Monday are generally quite interesting days for trading gold. So it's 13:14. I usually come on a little bit earlier, but I've been doing things. So two time frames on the charts here. We've got the 15 and the 5-minute time frame. We're going to put the bar on. We're just going to get me some pretty quick because it's 13:15 now. There's the box. Excuse me. Going to put the trend line on, the green trend line on, and we're going to change that color to red. Okay, so let's go and zoom in. We'll put those trend lines on. We'll get cracking. So what's the higher high next to this candle here? Well, it looks like there isn't one. Oh, it's here. It's this red one here. Okay, so magnet tool on. That's where he's going. He's going there. And the lower low from that one is that green one there. Alright. I'm going to put that on the top of there. Looks like we've got a buy opportunity at the moment. That's going to go there. Let's put this, yeah, I'll do fine. Right, okay, so let's take our information from the 5-minute. So the 5-minute, we've got 3 minutes left on this time frame. Price looks like it's pushing up. We haven't gone and checked the news yet, so we look at the news. So my Forex book. Look at the calendar, see what's happening. 13:30, yet again an abundance of US news. I've also got non-farm payroll, which is interesting. All high priority, and non-farm payroll probably the most important news in the trading calendar. Let's get that open. Okay, that's shooting upwards. We've got our MT4 open. Everything's ready. So what have we got in terms of indicators? We've got the imbalance down below. Didn't quite get taken out yesterday. It touched it. This imbalance at the top, that's been taken out. Yeah, that's gone. So we'll get rid of that. They say 90% of all success in trading is psychology. If you've lost trades by chasing trades, over-leveraging, or second-guessing your strategy, then you are acting from your emotional brain. The part of your brain called the monkey brain. It makes you act without thinking and then calls you names for losing. Access my brand new resource, Teaching the Monkey to Trade. This training is designed to improve consistency and results, teaching you proven NLP techniques. You'll also get access to an exclusive interview with trader and master NLP practitioner about learning 90% of what it takes to succeed. Get free access to the resource and interview by clicking the direct link in the description below. Makes the chart look a little bit cleaner. In terms of the moving averages, we've got the 800 up here. So potentially this could be a quick trade. We've got 79 pips going up to there. That's in the right position. We know that gold has been going down. It's been going bearish for a long time because of the strength of the pound, strength of the dollar, and also increase in interest rates. What I like to do as well is I like to go and put the vertical lines just to highlight the news, just because I might miss it. But other than that, looks good. Right, okay. So that was a bit of a quicker introduction today because I looked at the time and literally just had to jump on the chart. So welcome to another Crossfire session. Let's have a look and see what we've got. Okay. So 5-minute chart. The PSAR is underneath the candle, which is what we want. Do we have any ninja alerts? We've got a ninja up here. So potentially ninja up alerts. The conditions have been actioned. We've got the 13 moving average. And the 13 moving average, that changes colour as part of the ninjacator. That's green. Okay, we've got the moving average, the yellow one, which is the 5 moving average. That's underneath. We've got lots of news coming up at 13:30, including non-farm payroll. And it's Friday. This is going to be a really interesting session. This is going to be really good. Let's see what's going to go. Stochastic. The stochastic is currently going towards the top, so it's showing me that. I'm going to look at price now. It's going down. It's showing me that it's been overbought, probably because of this move here. So that's what that's saying at the moment. So let's just sit and see. Let's just sit and see what price is doing. I really don't want to do anything until the major news kicks in, and then we'll see where we go. You see this candle now is coming down towards this PSAR, this parabolic stop and reverse, and now it's just touched it, and that's turned that PSAR at the top. And because there's a fair bit of volume in that move, the PSAR has got quite a bit of a gap between the body and the actual PSAR itself. Okay, so now we've got the 13 moving average has changed to red. And remember that the essence of this Crossfire strategy, we want the price to go below the red trend line for a sell, and we want it to go above the green one for a buy. And currently, we're now back into a sell situation. But remember, what always happens before the news, we've got this area here. Oh, sorry, magnet's still on. So we've got this area hit. Oh, come on, John. There we go. Right, let's try again. We do indeed have this area here of consolidation where price doesn't go up or down, just rotates sideways. So let me just take it further on. So it rotates sideways. And what happens during times of consolidation is that people, retail traders around the world have stop losses set above and below. And what will happen is the banks and the financial institutions, they can see everyone's stop loss and they know where everyone's order is. And because the banks have lots of money, well, yours and my money, and they use it to their own advantage, they will then take people out of these positions and liquidate those stop losses. So as you can see from here, the price pushed up, took everybody out that position, and now the price is coming down outside that consolidation and it's liquidating those positions. So what it does for them, it then gives them liquid assets to then place their own orders. So, you know, if you see moves like this where you know it's consolidating, you've got little bits of volume, and you don't really know what's happening. You stay out of it until the move shows its hand. Okay. And you might think, well, you know, banks, they shouldn't do that. They shouldn't manipulate the markets. And the fact is that, you know, everything is manipulated, and the banks need to do that, because they, you know, when you put 3 or 4 billion into the market, you need a buyer or you need a seller. You need that balance of the market, and this is why you get imbalance, because they'll chuck, you know, 4 billion into the market, and there won't be anybody else on the other side to buy it or sell it. So that's what happens, and that's why the banks do what they do. So we're just waiting, seeing what's going to happen, and we take this this area of consolidation off. Again, try and keep the charts nice and clean. So in terms of the imbalance, if we look at the 15-minute, as we can see it a bit better. So this imbalance was actually created, I think, back in December. No, sorry, the 30th of September of 2021. Okay, that's when that imbalance happened. So that imbalance is still there. It took it out a tiny bit. Okay, this was on the 8th of July, which was sorry, 8th of July. That's today. Can't be right. Yeah, it is. Yeah, sorry, 8th of July. It's the 8th of July today, folks. Working too many hours. Okay, so it's touched into that imbalance, and it came back, and now look at the price. It's coming down. Let's look at the 5-minute. So might today be the day, because of the news, because it's Friday, because, you know, the traders and the bankers, they're looking forward to the weekend, you know, going to the Hamptons or whatever they do. Are we going to see price come down, take out this imbalance around this non-farm payroll news? It'd be interesting to see. And this is why I always like news, because it allows the bankers to hide behind the news, because they're not legally, or they're not really allowed to openly or overtly manipulate the market, so they do it behind news. You know, so well, we didn't manipulate the markets. The news had an effect. It was non-farm payroll, always has that effect. You know, so that's what they do. So if we know what we're doing, and if we understand what's happening, and understand the possibility of what could happen before the news hits, then we've got a better idea of getting in and getting out of a successful trade. So looking at this 5-minute time frame, we've now got a ninja down alert. We've got the PSAR, the parabolic SIR on top. The volume, or the gap between the body and the PSAR, has increased. Stochastic at the moment is tailing down. Okay. Which means it's kind of in the middle of nowhere at the moment, the stochastic. Price is heading down, but at the moment, because of the news, that doesn't really matter. As I've said on so many different sessions, you know, we could get into a trade, and it could shoot, you know, 20 or 30 or 50 pips in literally the blink of an eye, or the click of a fingers even. And you know, if you don't know what you're doing, you can get yourself into a lot of trouble very quickly. If you do know what you're doing, and this crossfire strategy is really simple, if you're patient, and if you get rid of that, I'm missing out on the trade. You know, you could have got in here, John. Why didn't you get into there? You could have taken all these pips. You know, you could have taken all these pips down there, you'd have made 40 pips already. Why didn't you get in? And it's because the conditions aren't met. Quite simply, conditions aren't met. And we're traders, not gamblers. Right, so we've got 10 seconds, as I say now. 10 seconds left on this time frame before the news kicks in. And it'll be interesting to see what goes on, what happens. Sometimes it doesn't happen just straight away, it doesn't happen immediately. But we'll see. There you go. We are not getting in that. That is... I said it'd be exciting. I said today would be exciting. And that was a monstrous move. Is that the right word? I think that'll do for now. So what was that? Something like 107 pips in the blink of an eye and a snap at the fingers at the same time. You imagine if you'd tried to get in that, it's just moving too fast. And this is what banks sometimes do, is that they'll make a move so fast that retail traders like us can't get in, and that's another tactic to for them to consolidate the market and monopolize these particular moves. And right now, maybe you're thinking, okay, you could have made 100 pips. Yeah, you could have lost 100 pips as well. If it's going to be, sometimes you look at the markets and you go, yeah, not today, thanks. It's okay, not today. And there's nothing wrong with that. Actually, let me just check something. Is that taken out? It almost has, hasn't it? Let's move... Let's move this. Let's move this out of the way. There we go. Did it take out the imbalance? Yeah, it took it all out nearly in one go. So it took it out to there. Let me put a horizontal ray on. So that's where it went down. And took out that imbalance to there. There's still a little bit left. Okay. But what's going to happen now is that this market will right itself. If you imagine, a boat capsizing in the sea, and then suddenly it rights itself and the storm kind of goes, and then we can get in, then we can consider getting in the trade, as in entering the trade. So what have we got? 2 minutes left on this time frame, and as we're coming towards the end of the time frame, as I always say, sometimes at the end of a time frame we get a little push. Sometimes it happens and sometimes it doesn't, and today it's happening. So even though conditions at the moment are still being met for a sell, what I want to do, I always like that for there to be a new candle with a gap in between the trend line, and then it will move to the downside. That's what I rather prefer. I don't like it when it's got its feet in the upper area or the lower area. I like a clean separation and then a move to the downside or the upside. Let's just see what's happening. Still massively volatile, this market, and it just presents a lot of unpredictability for us. Let's say all that news, non-farm payroll, the fact that it's a Friday afternoon as well. One of the questions I get a lot is, I've got a trade on one of the longer time frames. Do I close it before the weekend, or do I keep it open? And my usual answer to that is see if you can close trades before the weekend. And Friday morning is quite often okay to trade. Friday afternoon on the forex pairs, things generally start to tail off because of the weekend. But with gold, metals with gold, it sometimes those positions are sometimes closed out from the week, ready for the weekend. So such as taking out imbalance from previous days, and it can be interesting. And certainly so far, it's been interesting. But still, we're not convinced. I'm not convinced that there's a safe trade to be had right now. We've got 1:24 left on this time frame. If the price kind of, if the new candle is below the red trend line and conditions seem to be met, then I might consider getting in for the buy. But at the moment, we're just patient, watching, seeing what happens. Okay, we're in for the sell. I kind of like this move. It's going to happen quick, I would imagine. And we're going to be doing 10 pips. So 5 pips up. Go and put this on there quick. Oh, for goodness sake. Okay, that's it. That's 10 pips done. Didn't take too long. But with a day like today where it's really volatile, it's good. Again, tapping into that little sweet spot of 10 pips. Could potentially get more, but we're done. We're done for the day. It doesn't really matter too much with the trend lines, because what you'll find as you trade is that price will start respecting trend lines, as I've shown you before, because they offer support and resistance. So there we are. We've done our 10 pips for the day. On a day where normally, going back in time a few months ago, maybe a few years ago, I would have said non-farm payroll, don't even bother, it's too volatile, it's too dangerous. And yet we've got a strategy where we're able to do that, because it's a good strategy, because it works, and because we've been patient. I'm still thinking there may be opportunity for this price to go further down here, and I think that'll be interesting to see if it'll do that before the weekend, because of this push down here. Is price going to want to come down? Are the banks going to want to take out this imbalance, or the rest of the imbalance from there before the weekend? Okay, so we've done our 10 pips for the day. That was a nice, fairly steady trade, and again, really interesting price action because of the news and because of non-farm payroll. So it's currently 13.43. We'll come back at the end of the session and see what happened with the price. Hi there, John McLaughlin here. It's 15:30. Let me just show you what we did on the gold session. As you know, this box here represents 1300 and 1500, and we came on to the session. We knew it was non-farm payroll. We know it's gold. We know it's Friday afternoon, so we know something is going to happen. There's going to be some sort of events go on. And here at 13:30, non-farm payroll, the news kicked in and the price dropped literally within the blink of an eye, or indeed the snap of the fingers, and we just sat back. We let the banks do their thing. We let the banks just sit back and let them do their thing. We then got into the market when they stabilized a little bit. We took the 10 pips. After we took the 10 pips, then price went back to the upside. And that, again, when things are not congruent, when things don't always line up, then 10 pips with this strategy, the Crossfire strategy, is the sweet spot. And we've proved that yesterday, we proved it today. So 10 pips is nice. And remember, all you do is risk 1% of your account size, you adjust your lot size accordingly, and 10 pips can be whatever you want it to be. So the market went up. It didn't present any buy opportunities because this is the trend line for the buy opportunity. It's starting to go now, which is interesting. Maybe it wants to have a little final flurry before the weekend, but as far as we're concerned, we're out the trade. We've taken our 10 pips for today. We've had a good trading week again, and we're quite happy to close out and go off and enjoy the weekend. So again, that brings us to the close of another good trading week. I hope you've enjoyed these sessions. I hope you're enjoying these sessions. I know I'm getting a lot of really good comments, a lot of feedback, and once again, thank you to all the new subscribers that have come on board. And if this is the first time you visited and you like the content, then subscribe to the channel. I'll invite you to do that. And if you want to know anything else about gold, and I mentioned that I'm also putting a course together to talk about things like imbalance, things like the EMAs and the PSARs, and the general sort of things that we talk about on the session, just to give you more clarity and more detail about how we trade it and what it really means in the market. And it just allows you to understand the mechanics and what happens in the day-to-day of trading. So that's it, the end of the week, and I hope you've enjoyed it. We'll talk soon. Bye for now.